Jim Bianco, president of Bianco Research, joins us from Chicago, Illinois this morning. Jim, so to ease or not to ease? I know you're expecting QE3. Do you think it's because of Spain and the problems in Europe that's going to actually cause the Fed to pull the trigger?
No, I expect the Fed will ease. I expect the Fed will get the data from the U.S. over the next couple of weeks, maybe as early as this Friday with payroll reports. If they come in under 150,000, Bernanke gave us that kind of line in the sand at his press conference last week, and that they'll find a reason to. Should they ease? You know, when you talk about the Fed, there's always what will they do and what should they do. No, I'm more in the Dick Fisher camp of Dallas Fed president, that the Fed has done too much and that the Fed risks long-term problems down the road with all of this easing. But I recognize that that's not the way that Bernanke views it. And with Paul Krugman pushing him to do more, and that seems to be the criticism he's getting, I don't suspect he's going to back off at all.
Yeah, but you expect Europe to get worse, so shouldn't there be some sort of central bank response in that case?
The central bank response will come from the ECB. And I don't know if necessarily if it'll come from the Fed, only if the data from Europe, it gets so bad that it starts to drag down the United States. At current point, that hasn't happened. But yes, Europe would probably get worse. Europe is having a financial crisis, a banking crisis. They can't really fund themselves without sky-high interest rates. And that's what's causing the talk about growth versus austerity. And it's going to probably have to get worse, much like last November. It had to get worse, worse, worse. And then eventually, when it got so bad, the ECB stepped up with the LTROs. Well, I think we're in that same cycle again.
So you expect another round of LTROs then. So what does that mean for the markets?
I don't know if it'll be LTROs, but I expect some kind of a move by the ECB to help to manipulate interest rates lower like the LTROs did. And I suspect it'll have the same effect. It'll probably spark a rally for a while. We'll believe that the European crisis is all over with, and then it'll be back in the fall. This is nothing that's going to fix the problem. It's just something to push interest rates down for a little while and push it off. The problem in Europe is the euro. The problem is the euro is a flawed structure. 17 countries using one currency does not work. And until they address that fundamental issue, this problem isn't going to go away, and they're not addressing that issue.
Well, that might be a while, Jim. So talk to me right now on what happens in the markets, because, you know, you have analysts and strategists. They're differing views right now. Do you cap the gains here after the first quarter? Is that it for the year? Because analysts, some analysts, if you take a look at the EPS, at least multiples growth, they're expecting the S&P to hit 1569 in just a few years' time.
Yeah, the S&P is up about 9% for the year right now. We've been having the attitude that the market will have a 5 to 10% year, so we're at the higher end of our range. I don't think there's going to be much left for the market going from here. Maybe not a lot of downside, but very little upside. As far as earnings per share goes, or earnings for the S&P, funny thing happened. 2 weeks ago, everybody was heralding that, 85% of the companies were beating estimates and the numbers look great. And then the next few hundred companies reported, and all of a sudden, that great beat rate and everything is now back to its historical average. But the problem is the growth rates are terrible. They're at around 3 or 4%, and half of that growth rate, amazingly, is one company, Apple. If you take them out of the equation, you're not even beating the inflation rate with earnings growth right now in the United States. So all of the optimism that you heard from earnings was on the idea that we were having booming earnings, but we're not really having booming earnings. Apple is having booming earnings, and the rest of them aren't really.
Okay. Jim, enjoy your Labor Day, or May Day, as you said. It began all the way in Chicago, all the way back a few, 1883, something like that? But anyways, thank you so much for your time this morning. James Bianco.
Yeah, thank you.
1886 of Bianco Research joining us from Illinois.